Thanks very much, Chris. Great intro. Thanks to the organisers and the sponsors for making this outstanding event possible, and thanks everyone who's here today for your time. It is greatly appreciated. Medallion Metals. This is a simple, somewhat unique opportunity in the pre-production gold space in Western Australia. It's an opportunity to unlock a significant amount of value in the short term, and then that's coupled with a broader strategic potential that we're really just beginning to understand the magnitude of. In today's presentation, I'll step you through our plan to unlock that value, realise that potential, and thereby position our shareholders to really benefit maximally from when we're successful in executing that plan. Here's the strategy and the metrics in a single slide. Management's identified an opportunity to bring the Ravensthorpe Gold Project mineral resources together with the established infrastructure at the former Forrestania nickel operation, and thereby create a new gold and copper producer in Western Australia. And we think that that transition to production can happen rapidly and occur at minimal capital cost. Now, this isn't a case of a junior acquiring a mature asset from a mid-tier and then looking to extract the last drops of value. What we're doing here is creating an entirely new business by repurposing that infrastructure to treat the Ravensthorpe ore. Now, the asset combination, it's significantly de-risked. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permits substantially. And of course, we are leveraging off a significant amount of established kit, particularly at the Forrestania end. The capital's modest and it's efficient. The margins are high. The project will generate superior risk-adjusted returns, a rapid payback. And then when you get that base case business model up and running at Forrestania, it creates a potent platform for growth. By establishing that gold production capability at Forrestania, a range of growth opportunities open up to the business, both from within the ground that we'll control, but also from the third-party deposits that are within economic trucking distance. So just touching on corporate market capitalisation, circa $330 million. We've got $25 million cash at the bank at the end of September. We are more than well funded to get to a final investment decision at the end of this calendar year, and then that cash balance will contribute meaningfully to project development in 2026. In terms of leadership, we announced last week some significant new additions to the board and the senior management team. I'm absolutely delighted with the calibre of the individuals that we've been able to introduce both at the board level and into the senior management team. That team has got the experience, got the skill set. It's perfectly suited to where our business finds itself at the moment, and then more importantly, it's perfectly suited to where we want to take this business over the next 2 to 3 years. We've picked up some analyst coverage over the last period of time. 5 brokers covering the stock now. Pleasingly, all of those target prices some way north of where we're trading at the moment. And then the other thing that's worth noting here is that the register has evolved over the last 6 to 12 months. We've now got a corporate presence there, an LK, an ASX-listed gold producer with about 5% of the stock. And we've also built a significant, strong, quality institutional presence there as well. We haven't had that corporate institutional presence endorsement in the past. This has been a really strong signal to send to the market because those investors, Headley being one of them, they're experts in this end of the sector. They know what they're doing in this end of the sector. They're clearly endorsing the team, the strategy, the assets, and it'll be fascinating to see how that register evolves over the next 12 months. So turning to the sulphide production strategy, this is a strategy shift that has had such a dramatic impact on our business. Its valuation, our ability to access capital, and really at its core, it's all about reducing time and money to get to first production, and we do that through 2 principal mechanisms. The first is that we leverage that infrastructure at Forrestania. Now, at Forrestania at the moment, there is a fully functioning sulphide flotation plant, and it's remarkably well suited to treating the Ravensthorpe ore. It's on grid power. There's a tailings storage facility there. It's fully permitted. It's got capacity. It can be expanded. There's remarkable support infrastructure, camp airstrips, and there's underground mining infrastructure which we can transplant from Forrestania down to Ravensthorpe. So all of this is a tremendous tailwind, free kick for us to get into production quickly and at minimal cost. The other lever that we pull is that we focus on the sulphide component of the mineral resource at Ravensthorpe in isolation. This is the highest value, it's the best understood subset of the mineral resource, and by focusing on mining that from underground, what we do is reduce the disturbance footprint at Ravensthorpe dramatically. We go from 250 hectares of native veg clearing under that standalone scenario down to 70 to 80 hectares under the underground mining scenario. So again, this is all about compressing time and capital to get to first production. The more we look at this strategy, the more we like it, the more synergies that we see, and the more opportunity that we see. We released a scoping study into the technical and the commercial merits of the proposed development in December of last year. This slide focuses on the physical, the production elements of that study outcome. On the left-hand side, you can see the proposed development at Ravensthorpe. On the right-hand side, that ortho photo shows you the established processing infrastructure at Forrestania, and the red annotations are the changes that we're proposing to make. So production inventory, 2.7 million tonnes, 3.9 grams gold, 0.6 copper, 500,000 tonne per annum throughput rate, yielding a mine life of 5.5 years. That production inventory was crimped somewhat in terms of how much inferred mineralisation we could bring into that mine plan at the scoping study level, but there's been 15 kilometres of infill drilling coming behind that. It's led to an MRE update, and we're pretty positive that that production inventory is going to come up in the next iteration of the study that's coming next month. High metallurgical recoveries to two principal products, a copper concentrate with a precious metal credit, and then we leach the float tail out the back end to make gold and silver doré. This is a direct analogy for Volt's deflector project, if you know that asset, specifically as it relates to mineralogy, but then more generally as it relates to scale and process route. And if you put all those metrics together, it yields a run rate in the first instance of 70,000 ounces per annum on a gold equivalent basis. If you take those physical metrics and drape over them to some conservative cost macro assumptions, it yields the following outcomes. So modest upfront capital, $73 million, roughly split down the middle between building the mine at Ravensthorpe and then undertaking the modifications to the process plant at Forrestania. That's efficient to get us to that 70,000 ounce per annum run rate in the first instance. High margins, all-in sustaining costs, $1,845 an ounce. That's Aussie, it's net the byproduct credit. The project generates about $500 million of pre-tax cash flows under the base case assumptions, or $90 million per annum over that mine life. Impressive returns on investment, rapid payback, and then of course if you run a spot scenario, all of those metrics enhance dramatically, and that's not unique to our project or other projects at this sort of similar stage of life. But as Headley pointed out in his presentation as well, the other thing that the project is levered to is increases in the production profile, so extending the mine life or increasing the annualised rate of metal production, and we're working on two key initiatives to manifest that when we get gold production capability up and running at Forrestania. Now, the first of these is at the Ravensthorpe Gold Project. This is the most advanced, the most tangible of those opportunities. We couldn't have taken advantage of the Forrestania opportunity in the absence of this base foundational asset of the business. That's the mineral resource at Ravensthorpe. We've drilled 80 kilometres here since we listed in 2021 to grow the resource to where it stands today, 1.1 million ounces of gold, 42,000 tonnes of copper metal at a reasonably high grade. We think we're just scratching the surface of this significant mineralised system. Average depth of drilling here 100 metres, mineral resources estimated at 330 metres below surface, deepest ore grade bedrock hit we've got into the system 400 metres below surface. And if you know Archean gold lodes in WA, you'll recognise that those metrics are relatively shallow. The lodes are open at depth. In most cases, they're open along strike. We fully expect that with increased drilling, ongoing investment, that the mine life will extend through extensions to those known lodes. In addition to that, in the most recent drill program, we were successful in identifying two new lodes in the footwall at both Gem and Harbour View, impressive grades over mineable widths, only one hole into each of those lodes at this point in time, but they have the potential to add to mine life or increase the production profile, given that we're opening up potentially a new horizon there. So there'll be a drill remobilising here next month. Roughly a 15,000 metre drill program. That drill program has got essentially an extensional flavour to it with a little bit of infill, but those drill results, we think this deposit's got a lot more to yield The news will be flowing from here off the drill bit well before the end of the year. The other opportunity, which is earlier stage but potentially higher impact, is at Forrestania. Now, as part of the transaction with IGO, Medallion will acquire all of the mineral tenure associated with the Forrestania nickel operation. That's 900 square kilometres of tenements that straddle the Forrestania greenstone belt. This is an historical, fertile goldfield that's been locked in a nickel business for a generation. It threw up Bounty, which produced 1.3 million ounces at 5 grams. That's mined. Bounty's not part of the tenement package, but we control the geology immediately to the north and the south. Now, this is a rare opportunity to get our foot on a greenstone belt in Western Australia that's underexplored for gold. Tenements extend for 160 kilometres north to south. They contain 33 registered prospects within WAMEX, 3 historical gold resources, 50,000 drill holes, only 9,000 of which have been assayed for gold, a vast geochem, geophysical data set. There's multiple walk-up drill targets here, areas of interest that we'd follow up based on the anomalism that we can see in that data set. Now, an opportunity like this needs time, it needs technical capability, it needs balance sheet to systematically work through and take advantage of. But if you've got a mine life of 5 to 6 years at Ravensthorpe, which we fully expect will extend, then that gives us the time and the runway to work through this opportunity, notwithstanding we think we'll have some quick and easy wins here. And in addition to that, when you get that gold processing capability up and running at Forrestania, it brings into play those third-party deposits. If you own the mill, you call the shots. We see multiple ways to bring Forrestania back to being a significant gold production district in WA in the short term. So where to from here? 2 principal work streams underway in the business at the moment, one at the corporate level, one at the project level. At the corporate level, we are focused, we're working with IGO on closing this transaction out. Now, they've worked with us through this process, they've partnered with us through it. They want to see us as de-risked as possible when the time comes for those assets to come across, because with those assets come some significant obligations which we need to manage responsibly, and we will. Now, the key de-risking milestones from their point of view is to complete the feasibility study, which will occur next month, have the funding arranged, not necessarily drawn, but arranged, available to be drawn subject to closing the transaction with IGO, and then the Medallion board making a positive final investment decision to go ahead with the development. Everything that we're doing at the project level is geared towards that outcome. The mineral resource has been updated. We'll be releasing the metallurgical work in the next couple of weeks, key parts of the feasibility study. The study's advanced. We're seeing the physicals, the costs. We're liking what we're seeing, so that will be released in November. The permits are progressing at a pace. There'll be more updates before the end of the year, and then we're well placed to make that final investment decision at the end of the calendar year and then roll into development in 2026. I'll also mention that there's been, as it relates to the financing element of those CPs, there's been a huge amount of interest in that copper concentrate the project will produce. We've had multiple approaches, multiple offers presented to us, some of them with attaching funding solutions of up to $50 million. If we can progress one of those indicative offers through to a credit-approved offer of finance, then that puts in place that base piece of capital around which you can build the project. And it just makes that equity funding solution that much more digestible, particularly off the market cap of the business at the moment. So to summarise and wrap this up, we think it's a compelling opportunity for investors who are looking for exposure to advanced pre-production opportunities for gold in Western Australia. This is a sector of the market that's attracting attention and capital for the first time in a long time, and I agree, this is a process that's just getting started. The business is well run, it's attractively priced relative to its peers. We're crafting a clear, concise pathway to being a 70,000 ounce per annum producer in short order at minimal cost. We're absolutely laser focused on progressing down that de-risking pathway to get to final investment decision at the end of the year and then into development in 2026. We think as we make that progression, the value of the company begins to reflect the underlying value of the assets and the growth opportunities that we've got in front of us. So 2025 and 2026 will be packed with positive news flow. The timing couldn't be better. Record $8 gold prices. M&A starting to heat up in the sector. If you haven't done so already, I'd encourage you to come and take a closer look at Medallion. Come and see us at the booth. Contact us through any of the channels. We're always happy to arrange a meeting, talk to you about what's unfolding at Ravensthorpe and Forrestania. Thanks, everyone.